Welcome to TradeTheMBI.com. This is John's Reports for the 4th of October. So the other day we break below the 38% here, come down towards the 23, and then had a nice little oversold buyback, pop back into, back up to the 50%. The problem is you're still below the red line, so any move that this makes is still going to have to come back and retrace. So I wouldn't get all that excited. At this particular point, though, we got orange coming down, and the steel had crossed above cyan, which was the bullish part of that. And we're still so far down here at the minus 20 level that we were looking for maybe potentially some kind of pop, but unlikely for this to be the one that really creates the turnaround move. So we'll just keep an eye on it, because it's just a question of, if steel comes back below cyan at any point through here, that's an additional short, and any turn back up of orange prior to getting below red. Those are the key triggers for us. Shakeout from a bullish standpoint just doesn't exist at this particular time. Though you do have still yellow below blue, and that's just never a buy. So yes, we were expecting some kind of bounce backs, but that doesn't mean that this one so far is a turnaround. It's still too early. This shows much more of a continuation pattern within the NASDAQ. It was a little bit more bullish in general, given the fact that we were still in a short, but broadly, speaking, it had a little bit better readings, but not so much at this particular stage. You still have the cyan above blue, but we're in continuation, and as soon as you see any move of green below red, that's a secondary short opportunity to look for the lows again. And the euro making its comeback as the talk of Brit exit starts to get worked out, and all this new optimism. We'll see. So the problem with this is no reset of the steel, so any pop that comes in here, you're still going to end up with a fade as soon as there's a rejection of green and cyan DOC right here. And that's what we look for, because again, you got to have the crossover here. If you don't have the crossover and you have a rejection where cyan moves up and green moves lower, then you can expect much more significant drawdown. But it's been a pretty good recovery, given that they were looking pretty precarious down here at the 108.8 range. Now you're at 109, so it's a full penny move on the recovery. Not bad. And this is where it gets a little bit more interesting, because with oil approaching the bottom side of this range, a dip below that could cause some panic going on, because that would indicate that we're not just talking about supply excess, we're talking about a lack of demand. And I think that becomes a serious one, because again, this whole political situation causes people to just suspend what they're doing, whether it's hiring, expansion, those kinds of things, because of uncertainty. And in and of itself creates that self-fulfilling prophecy of they've been begging for a recession for months and months now, hoping that it would go into the election year and things would be weak. Kind of a sad thing to hope for, but that's what the plan was. And gold, from its standpoint, is probably going to start elevating a little bit better here. This is a okay buy configuration. We're making a slightly lower pivot, having moved here below. The red line kind of popped up dramatically from there, so we may see another pullback before we get a secondary one. We probably would want to see a DOC red above the 7.5 to capture a really strong move. Looking at it from a 5K stand, what a wild day this was. It was pretty fun. We started off with just kind of a mix. We were coming off of the small little buy. We had some serious back and forth weak patterns, and then we ended up with a okay DOC spread that was right here. I wasn't expecting a whole lot from it, but then it dipped down okay and then produced modestly all right buy. Coming off that first dip, I'm always a little more suspect of these kinds of buys, because when they turn around, usually you would get a secondary dip, and that's usually where this P2 comes in right over here, and that's the one that usually should have a little bit stronger, but you've got to get that P2 where you're about to cross green over cyan. Not even close at this particular stage. And so as soon as steel crossed below with orange above and green below the red DOC, all four of them in line, and I just kind of look and see as my shakeout at least the histogram below yellow, and interestingly enough, it didn't do a whole lot. It just kind of came, and then there was this, and it was just instantaneous, and it's complete liquidity pullout, and price just plummeted super fast. And then it cascaded from there, because once you were below the 80, you had 70 next, and almost got down to the 47 one before it started to capture a turnaround, and then you broke above the negative 13.5 with green above. That was enough. And so you've been getting it, well, that should be a yellow one, that's magenta, because that was actually a decent buy there. And even though it turns around, you have this straight up DOC red, which long-term buy, that was just some serious power, just push that through. And of course, you have new fund money coming in, starting from the other day all the way through now, and probably through Tuesday of next week. So it's not like the resources aren't there to drive this. And this was a pretty decent drive, because came across, then we stabilized for a while, and then cyan under green, red, DOC, and the green split right there, and that propelled another run, which gave you just the opposite of that steel below cyan in this particular case. Even if you get red dips below, the green in that, all that does is give you opportunities at weakness, because this is super bullish. You're not going to change any of that. The closest we had was the DOC spread, and with the steel below the negative 13.5, it was likely to, once it crossed over, it was going to turn around to a buy signal, but at least you could capture whatever was available for it. My thought was that it would attempt to fill most of the positive extremes. Those went all the way back down, though, to just above that 2880 level. So it didn't even quite get to there before it started to turn around. And it's one of those where I was expecting it to be a short-lived situation, so I wasn't going to mess with fighting that turnaround. And then we did the nice slow cascade. We took out the highs with the cyan to the red there, and again, even with the steel crossing above, you just had these weak setups with steel coming from below. You needed to see that steel come above, like here, and then back below. So these were the early warnings, and then we got close up to it there, and a little DOC spread right here. And in this particular case, it was really not moving a whole lot. And that happens because, it was still enough to get to a 50% move, but that was a big it's super reduced range from the broader, simply because we had kind of consolidated for a while. But it was still a decent dip down, because you had right at the 2905, in this case the 50% level, that was right around 97-ish, well, 98 really. So, but hey, 6-7 points is still decent if you're, active in your trade setups. And then we ended up with a broader one that came in right over here towards the end of the day. That dipped down, and then post-market, we popped up a little bit, and they just faded that one back, because we had all these dips below the red line, and it just came right back to the same 2905. The problem area is for now, if we see a rejection for lower, there's nothing until we get down to the 2880. More likely than not, though, we also have what happened with this dip right here, which could be around 86. So I would be kind of like watching that at that particular point. So all in all, we're still within a broad short. If we look at it from a 50K standpoint, we can see how that transitioned. So from the DOC spread that we had here, we had all this range with no steel reset. So that was your complete rundown. Power mo like this one, because again, the cyan then fell below green, and it was still rising. And then we finally did get the end of the full short, which was right here, with the steel dipping below red. And at this particular spot, we have steel popping up above. So even if you do get some short signals, it probably is going to be a little bit in between, especially with the rising on a 50K. We also have gold continuing to rise. The problem is gold rising here, and that under the 50%, it's not the greatest. The draw to the upside is the fact that we've had Morganacci highs dipping, the 100% line falling. Usually price wants to pull up towards that peak, especially when we've had this consistent of a bottom zero level. So we got a little bit of a mixed configuration-wise before we had a few days of just real clarity that we were in a beautiful, long, short. It's kind of been reset. And it's just a question of, you're going to see a turnaround, because at this particular point, even though the steel is reset, you still don't have green making any moves. So you got no midterm buyers or anything like that. We haven't dipped below the red line here yet. So from that standpoint, we don't have a call back to the lows or anything like that. So I think we're just going to see a bunch of soft mixed action. Again, here, I think it's easy from a 5K standpoint, because unless you see the red DOC taking out the previous highs and stuff, I would expect a breakdown to start to take place. But I'll be on Skype chat, putting up relevant charts as needed. Have a great Friday, as always. Talk to you later.